All right, Bing Bong, we're live. Episode 1, Around the Block. My special guest here today, not only then probably the best partners and mentors I could have, missing Mark, but Aaron and David.
Thank you.
That's crazy.
Thank you for having us on your podcast.
Of course, thank you. Happy New Year's to you both and everyone else out here watching.
Dry January?
Yeah, dry January. 2021 was absolutely crazy, obviously. Did you think starting out at the beginning of the year in 2021 that anything was going to turn out the way it did?
Yes, absolutely. Because now we live in the upside down and nothing makes sense.
I remember coming into the office when I first started on your team and everyone said, there's no more open houses. We're going to have to figure out other ways to make business. You also can't door knock anymore.
I think we kind of foreshadowed in 2020 as to what 2021 was going to become, and the momentum took us all the way through for sure.
But no, obviously, like being a new agent and joining a team of well-experienced people, I was more of the sponge. So what you guys said, I was soaking in, trying to put my own twist on things, trying to follow, exact patterns and lines. But as people who are already in the industry, in 2021 being the same way that it was and all of us being in the same boat, did you guys learn anything?
Yeah, I think in 2021, having the value of a team was a huge thing, right? Like David has been through markets that you and I have never been through. Mark has been through markets that maybe David hasn't been a part of. And we've been in a position where we've had online leads, open houses is the predominant way we get business, but we had to really pivot and rely heavily on database and referrals, right? And Dave, you've been through a bad market.
Yeah, I've been through one of the worst markets in a generation, and you nailed it. You just need to go back to the basics, right? And I think what this year showed us, and not just us as a team, but everybody in our industry, if you are a hard worker, and you are good at what you do, you excelled during this time. It was really feast or famine, right? I mean, teams like ours, did very, very well, but also there's about 85 to 90% of the realtor population that really didn't get much done this year.
Do you feel that had anything to do with more of like the agents out there who were more wanting to make that sale instead of finding that personal relationship with people, especially throughout this year of, the stress that people already have of working from home or stock market or?
Yeah, I think it's twofold. The first part is just that fear mentality. I think a lot of agents didn't know how to pivot, got freaked out by the market and didn't do well. But I think teams like ours, we always look for opportunities in any market for our clients. And so we continue to find opportunities, both residential, commercial, property management, and for our investors, where our clients are happy. It's not a matter of, is it a good time to buy or sell per se, right? Because everybody has different motivations for doing those things, but it's really finding the opportunity to get you where you want to go. And I think something we all do very, very well as a team are find incredible opportunities for our clients.
Yeah, I think our team, especially tagging on to that, is built on foundational principles of, does this make sense for you? Is this the right strategy for a wealth building opportunity? And if it is, we take advantage, right? The market can be ridiculous, but if you have instant equity as you buy your home, what's the big deal?
Yeah, and I remember a quote actually that I listened to a video I think of yours in the beginning of 2021 that stuck with me a while, and I kind of repeat that to my clients too. We're not here to sell a home. Obviously Zillow can give you that home. Everyone's got access to the internet and everyone can walk into an open house on a Saturday or Sunday and be able to look at the home, find the agent who's either holding the open house and close the house. But, that's something I think, even looking at our credentials now, we'll get into this more with the Zillow Flex, but how we've not only, taken that to the next level and been able to really hone in on what, our clients really want and how we can, like you said, help them in ways financially and future generations than just trying to sell them the first thing.
What Ben is meaning to say was your job as a real estate agent is to find off-market opportunities that don't exist on the internet.
No, exactly that. But you said that your quote was verbatim was, we don't need to sell you a home. You have Zillow to do that. And that's true. All the information is on Zillow, but it's more of what information can we provide to give that, fundamental and knowledge going forward.
That brings me to my slogan of the day. Dave, what's the slogan of the day?
Who you work with matters.
No.
Bing bong. No.
What was the quote you told us before this? Good agents aren't.
Great agents aren't cheap, and cheap agents aren't that great.
Bing bong.
Bing bong. So I looked up a stat here as we were going into the end of 2021. There was only 35 single-family homes on the market in Los Gatos and Saratoga. Obviously, our team's absolutely killing it. We're now part of the Zillow Flex program. What does that kind of say to you guys who've been in the industry for so long that we're now part of this like elite program? And with 35 homes and 1,000 plus agents, how does that make us?
Yeah, I think I don't like to toot our own horns too much, but it is a nice badge of acknowledgement that there are only a handful of brokers in the entire Silicon Valley that have this unique relationship with Zillow, and Zillow is just one portal. It's just one method to supply real estate information to consumers, but they do hold us to a much higher standard than you would in other portals and lead generation systems. So it just means that we continue to operate at a high level, and we have a high level of success for our clients.
Feeling the same way?
Yeah, I agree. I mean, it's a nice acknowledgement. I don't think at the end of the day it makes a huge difference to the consumer as to, what's happening. But I do think that when people click on properties and they want to tour it, a lot of people, we talked about this a couple weeks ago, a lot of people don't know what they're clicking on. They want to tour the house, but who are they getting matched up with? Is it a Redfin agent? Is it a Zillow agent? Is it a brand new agent who's paying, $300 a month to be on Zillow? Or is it somebody like us who's been in the game for a while and, can really help educate and steer people in the right direction?
Yeah. And I always look at it like our team is best suited for any real estate transaction for any client. I'm very proud of what we've been able to accomplish. So I always feel that I'm the best option for a client. And so to know that if they click on a tour request in Zillow and they're getting one of us instead of maybe a newer broker or somebody that has different types of intentions, that keeps me hungry, keeps me motivated, because I know when someone calls me, they're going to get the best out there, the best information, the best education, and the best resources that we offer. So, I love being that advocate, for that online lead, that we may not have known or been referred to originally, but now they're connected with us and I'm going to take care of them.
Exactly. And to your point, when I have my clients that meet you or they meet Dave, I broke my knee, I had COVID, I've done it all in 2021. And when they meet you guys, they're like, David's super cool. Ben was great. Right. So I never had to worry about my team member has to help me out. And ultimately that benefits our client because the ball's never dropped, right? They're always going to get somebody with the same experience or better than you.
Yeah, and you bring up a good point. You mentioned earlier about teams. This has been a dynamic that's been shifting over the years, and there are a lot of good single real estate agents out there, but they cannot perform at the level that a team will. And then what happens if you're a sole agent and you do it all? You do the staging, you put the sign in the yard, all of that stuff, scheduling, vendors, and then what happens if you get hit by the can't talk today. What happens if you get hit by the proverbial bus? You're done, right? And so we owe it to our clients to have redundancy built in, just in case, like you said, you break a knee or go on vacation, take a day off. I've got kids. If I want to take a day off, spend with my kids, I know that I can hand my client off to the two of you guys, and they're getting the same level of service as if I was there myself.
Because ultimately, taking time off will allow you to perform better when you are on.
Absolutely.
Right? The work-life balance is huge.
Mm-hmm. And I'm going to piggyback that too, especially just being the new agent on the team as well. Being able, with all the distractions of, so much going on and, it happens so quickly, being able to hand stuff off to people you trust and not only know that they can close it when you're not there. I think that's a huge...
you don't hand much off, though.
Yeah. Kind of a ball hog, Ben.
when I do hand it off, it's going into good hands. James Harden.
Yeah.
But that brings us to now 2022. And another interesting stat that I recently heard from Zillow was that from October 2021 to October 2022, we would see an increase in prices of 13.6%. And now, I'm not talking crap about Zillow, but this is the company that failed on the investment side of real estate. So what gives them, or what thought process is 13.6% coming from?
I mean, they do have a lot of data.
Exactly.
That I would say Zillow is more of a data company than a real estate company, right? I mean,
and I think they learned that the hard way.
Yeah. When robots can sell each other houses, we'll have to worry about Zillow outbuying real estate agents, right?
Yeah.
David said it best. He says robots can never sell each other houses. So until that happens, I'm not worried. But I mean, I would say that they have enough data to say something along those lines, right?
Yeah.
What do you think the 13.6 is coming from? Do you think we're seeing this increase because people are going to stop renting, or millennials are now turning 30 and they're now bouncing into the home market?
I think they're just looking at multiple factors. They're looking at the economic forecast for 2022. They're looking at inflation, which I think will be temporary, by the way. They're looking at interest rates, and they're looking at buyer demand, and then obviously supply.
Yeah, I mean, I agree. In Silicon Valley as a whole, we are in a bubble. We've talked about this every single podcast. There's not enough houses for how many people are here. Each person that leaves, there's 5 more that want to come. And until that's fixed, which it will never be fixed, we're built around a bay. Headquarters are still here. I mean, Metaverse just signed the biggest lease in 2021 history. I would say it would go up maybe more than 13%. But as a whole, you cash out from California. California drives the market, I'd say, for West Coast real estate. Seattle, Oregon, Idaho, Texas. Those people will pay cash, and they're going to drive up the market even higher. So
you
13%.
You think if we see that increase in properties, interest rates still rise a little bit? You still think we see a bunch of people
interest rates,
jump?
if they do raise, it's healthy. I don't think it's the worst thing in the world. What do you guys think?
I had an interesting conversation with a lender of mine this past week, and he said, look, inflation is going to be temporary and interest rates are going to drop next year.
If rates drop more, that freaks me out.
Why?
Money is already so cheap that if I'm buying a house today, $2 million bucks. If I can find a loan program that gives me close to 3%, why would I put more than 10% down? You can make so much money in the stock market, especially with all these economic forecasts saying that the market's going to go up. I would play the stock market game and borrow money from federally backed governments that say, okay, have 3%, you're going to make 30% in Tesla.
Yeah, absolutely. The more, it's leverage, right? So the more money you can borrow from a bank, the more leverage you have, to take your cash and apply it to other things. I agree.
You were telling me about something the other day, too, about borrowing private money.
Yeah, I mean, what we've started doing is, we talked about it just earlier today, going against 33 offers on a townhouse right by Communication Hill. What can you do as a buyer to separate yourself other than just being the highest offer, right? So I have a friend, he does private money, and we're able to borrow, we put down 32%, which is a pretty large number, but you take, 6 to 9% is your interest rate. It's not a forever loan, but you're able to close in 3 days. So 3 days as opposed to the traditional 30. You pay a huge upfront, fee of, 20 grand for $1 million bucks, but I think you're saving money in the long run by doing that because your offer is able to be lower than the highest offer. Does that make sense?
Yeah, and there's also the opportunity cost, right? Like what happens if you go the traditional route and you write 6, 8, 10 offers before you finally get one that's accepted because you're going traditional financing and the market's gone up 5%, 8%, right? I mean, just the opportunity cost of not getting into the market today, has a real impact on that as well.
Chasing the market, you will never win. Not in this area.
So with all this growth and still competing against 30 offers and low inventory, what is considered growing from this, or what's considered slowing down? What are people waiting for when they say we're waiting for the correction?
The people that told me that they're waiting are still waiting. That was 5 years ago. Sunnyvale went from $2 million to $3 million. Yeah. Cambrian went from $1.2 million to $2 million bucks, right? So keep waiting.
I mean, to me, those are people that are never really serious to begin with, right?
If you want a house, you're going to buy a house.
Right? Yeah, smart investors make money in any market. Yeah, I feel like the people who are buckling up for this crash it's just never.
There's never going to be a crash in the Bay Area.
Yeah, no, there'll be a
correction.
And you know what? There may be a crash 10, 15 years. I mean, who knows, right? With crypto and everything else going on, there may be some crash or major correction. But so what? Are you going to sit around and miss out on all that opportunity and equity just hoping that something 5, 10, 15 years down the road is going to happen?
Yeah.
Or are you going to set down roots and start to build a home for you and your family?
I'd say it all the time. You do not lose money by buying a house and the market going down. You only lose money if you sell the house at a negative amount from what you bought it from.
Yeah.
So we had a seller earlier this year that went from, they wanted to sell their house and their reason was they wanted to rent for I think 18 months and wait for the market to slow down and then rebuy in.
Yeah. How'd that work out for them?
Well, that's what, so
they should have bought a house 18 months ago.
Yeah. So for sellers out here who obviously you're going into selling a house thinking this is the right time to sell the house, highest peak of the market for selling, but then they have to turn around and buy something. So what, as sellers agents, and how do you go about telling then your seller it's okay, sell and buy? What's giving them the peace of mind that they know they have to buy at a high point too?
Well, because everything's relative, right? Like Aaron said, you can't time the market, right? If we could time the market, or if I could tell you we're the absolute top or absolute bottom, then we'd all be retired, right? Because same thing on the stock market. So from a housing perspective, everything's relative. For somebody that says, well, I want to sell high and buy low, then they run the same risk of what you just said. They sold 18 months ago. They should have bought 18 months ago because now prices are up 23, 25%. So, for the peace of mind for clients, it's like, hey, go back to motivation, right? Why are we doing this right now? I want my forever home, or I want my downsize home. There's no time like the present, because there's no guarantees in waiting that it's going to get any better. And I don't think it is. I mean, in my opinion, 2022 is going to be on fire, at least for the first 2 quarters. Then we may see a little bit of a slowdown come June, because we typically do every year anyway. But it's not going to be a crash, right? It's just going to be, people are busy with graduations and, travel and all that stuff. So we see a little bit of a lull. And then it's going to pick back up and be busy again. I mean, like Aaron said, there's nothing in the future, especially in the immediate future, is going to generate enough inventory to satisfy the buyer demand in our valley. Not happening.
Period.
End
of story.
Yeah. So anybody that's thinking about waiting, and especially when they say like, well, I want to save up more down. Well, why? When money is so cheap to borrow right now, why would you not borrow as much as you can, as long as you make the monthly payment? Because there's not a big payment difference between putting 5 and 10% down, 10 and 15% down. And
if you have job security, then why does that matter at all?
Yeah. Get in now, right? I mean, because like you said, Zillow says 13%, 13.6%. That's nationwide. That's an average. We know that we typically outperform the national average by quite a bit, right? Up until this point, over the last 6 years, national average was 2.3% annual appreciation. Silicon Valley was 8.8%. So if you apply that same logic to what Zillow's saying now, 13.6% appreciation across the board nationwide, then it wouldn't surprise me to see another 15 to 20% appreciation in our market.
Well, think about this. If you suck it up, you buy, maybe you really want a house that's 1.3, but you can't afford it, blah, blah, blah. So you buy a house that's $1 million. You buy it today. Goes up 13%. Now your house is worth $1.13 million. You make $100,000 as a salary. Boom. You just doubled the amount of money that you make. You made $130,000 off of buying a piece of real estate by living in a house as opposed to paying rent, and you made $100,000 at work.
And that's before the interest deductions and you know, all of that as well.
So as a W-2 employee, you have 0 deductions, right? So if you're working for the man, quote unquote, you have no deductions. If you own real estate, you're able to at least write things off. If you put money into the house, you're able to up the value of the house, write it off, and save money in taxes.
And even if it doesn't appreciate, and let's say, in 2 years, you're still at the same point that you were at when you bought it, and you have to move for job related, family related, or anything else, your money is still going right back in your pocket. You haven't lost a dime on it.
Almost every person that makes over $50,000 to $60,000 a year can afford to buy something in the Bay Area. They are unwilling to buy what they can actually afford, which is usually a condo at that price.
And time goes way too slow to rush into anything.
Right. And I have friends that
way too fast, I should say.
Made 50, 60 grand. They bought over in South San Jose for $500,000. It's worth $800,000 now. They're happy as heck, right? They're not selling it, but at least it's a basic foundational pillar to continue to build off of.
Yeah. Well, yeah, and especially, there's very little middle class here in Silicon Valley, but for the low to middle class, most of those people, the equity they have in their homes is going to be their retirement account. It's going to be the most amount of money they have, and so the sooner you, it's like buying in the stock market or investing in your 401k. The sooner you do it, the better for the long term.
But that's also the problem at the same time. I would say is most people that you see that are over the age of 60 years old that are walking around this valley are asset millionaires. They may be cash poor.
Yeah, but they're house rich.
Yeah,
for sure.
But they don't want to sell because they are unwilling to pay the taxes based on what their house is worth, so they don't sell, which creates an inventory issue, which goes back to the whole price increase of why things are so expensive.
Yep.
Yeah. No.
That wraps it up.
That does wrap it up. I would love to keep some more of that for the next podcast, because now I got some great ideas moving forward with you gentlemen. But I appreciate
it has been an honor to be on your inaugural. I can't talk today.
Number 1.
Where can people find this podcast?
Yeah, you can definitely check out this podcast on YouTube. It'll be in my link tree on my Instagram. So I appreciate you both coming by.
2022
is going to be amazing. Thanks for sticking around.